Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Well, the Q1 earnings season is underway. We're going to hear about two stocks this time around. One, very strong earnings reported on this company, and the second, expected strong earnings when the company reports. Our research director Shiraz Mian and equity strategist Brian Boland will fill us in. Shiraz, we're going to start with you. You're excited about J.P. Morgan, huh?
I am. And the reason for that is, Terry, that for the last, I want to say, entire year almost, but definitely for the last 6 to 8 months, the market has totally given up on financials in general. Even some of the best run companies, and JP Morgan definitely is in that category. It's the best run of the major banks, consumer bank, investment bank, all the major components in the finance sector. JP Morgan is a major market shareholder or a leader in that space. Yes, the numbers were very good when they reported on Friday. Not blockbuster numbers. Obviously, the 2018 as a whole for the sector, for all companies in the S&P 500, but for financials in particular, was unusually strong because of the tax cut legislation, because of more momentum in the underlying businesses. So we are up against very tough comparisons. And my sense is that the sentiment in the market, including estimates from the analyst community, have been pricing in this above average level of deceleration in all the core businesses. So whether these are the lending activities to consumers or businesses or the capital markets business, estimates have been weak. I'm not really seeing as much positive estimate revisions as one would expect, given the overall positive data we are seeing. And on top of that, there is this fear of we have reached this late cycle level where recession is seemingly around the corner. And if that is a narrative and scenario that one believes in, then you have to stay away from banks. I don't think that's a fair view of the economy and the market. And because of that, I think the overall negative sentiment on banks in general, there's plenty of other banks too that one could pick to play this favorable narrative and view that I'm sharing here with folks. But JP Morgan is the safest one. It's the best run, has the best business, and as we saw in the Friday numbers, whether it's in terms of credit quality, whether it's in terms of momentum in its investment bank, consumer bank, commercial bank, on all of those grounds, JP Morgan is very, very well placed. The stock has done reasonably well relative to its sector, though it has lagged the broader market for reasons that we just discussed. Valuation is very, very reasonable. For a company that's a leader in its space, it is literally a bargain price. And it pays almost a 3% yielding dividend.
Oh, wow.
Which
for a bank, that's kind of different.
It is. So it's all in all a very solid company. It isn't one of those companies that you pick and will give you a 20–30% gain, as probably what Brian will be pitching in his pick. But it's something that you put in your portfolio and then forget about it. It's kind of an anchoring role, a stability role, which will hold you and the portfolio together for a number of years. So that's why I like JP Morgan, and I think everybody should take a close look at it all over again.
Well, certainly the earnings that they reported recently were strong enough to lend optimism, not only to that sector, but from what you wrote in your earnings preview, to the overall earnings season atmosphere.
Absolutely, yeah. The sentiment on the group, as well as the broader corporate sector, has been very weak, and what we saw on Friday in JP Morgan's numbers does give us all a more optimism about the Q1 earnings season. Yeah.
All right, Brian, you're equally as excited about Airgain, right?
I am even more excited than Shiraz is because, as he says, I like those big movers, those big gains, those the action that you get in the small caps, and that's what you're going to get from AIR, which is the ticker. Boy, I thought it was AIRG, but for some reason here on the Zacks site, it's AIR, but AIRG, I think a lot of other places. It is a Zacks rank #1 strong buy. This one also sports that growth and value divergence that I love to see because I'm all about the growth. The growth stocks tend to do better than the value stocks, and they're a lot more exciting. At least they are to me. So let's take a quick look. Why I like this one. Number one, the earnings estimates are moving up. For the current quarter, moving from 2 cents to 4 cents. It's 2 pennies, but that's also 100% of a move. Next quarter, they're running that one up a penny, from 5 to 6 cents. Again, just a penny, but a big percentage move. For the full year, you're looking at 24 cents to moving up to 29 cents. That's what we want to see. And next year, 40 cents to 44 cents. That's a 10% move there. So I like that. One of the things that I did want to highlight here is all of the beats. So the last 3 beats are pretty good. We got 140%, 125%, 112%. And you'd say, like, those are numbers that are moving just a little bit lower over the course of the last 3 beats. So the beats, you would think, are they not that impressive? Well, in a name like this, you're really concerned, as much as it's great to see them be profitable, just like, just right now, so early in the stage here. And especially when revenue is only in the $14 to $16 million range in those quarters. I can tell you that revenue growth over those 3 quarters, for this quarter, it was 15%. For this quarter, it was 27%. And for this quarter, it was 29%. So revenue is moving higher. And that's what we love to see in a name like this. Here's take a quick look at the chart. The company's only been around for a couple of years, only been a few reports in here. But when Shiraz talked about the 30% movers and that sort of thing, it made me go back and do an immediate check to see how it has performed over the last couple of earnings reports. So the last earnings report, the options were pricing in an 8% move. The stock moved 13%. The quarter before that, and that, it should be noted that quarter was in November, so it was a little bit difficult time period for most of the market. It was a good solid beat. Stock was down 1% when a 10% move was expected. But the quarter prior to that, where a 9% move was expected, we saw an 18% move in the stock, and that would be in the August timeframe. So that would be on this particular move up. This quarter, we're looking at a 13% move, and the earnings are expected to come in early May. I think May 9th is the target date. So this stock needs to get on your radar immediately. I think there's a lot going on with the transition from 4G to 5G. The antennas that they have are kind of the main system for how devices are going to get this signal, this increased bandwidth. So I think that there's a lot to like inside of Airgain.
All right. Do you own either one of these stocks, Brian?
I do not.
All right. How about you, Shiraz?
I have it in the focus list portfolio.
Which one?
JP Morgan.
Oh, okay. Just wanted to be sure.
Yeah.
All right. Thank you both for that. And don't forget, there's always more stock information on our website, Zacks.com. Get over to the homepage. Check it all out. With Shiraz and Brian, I'm Terry Ruffalo.